G8 Education, the ASX stock, the biggest, largest holding childcare center companies out there, and this stock has gone up 10% this year, which is good for some of these companies. I was a bit shocked when I read this, but what is the company actually financially like? Is it a stock that you should be investing into? If you're already invested into it, should you stay invested? Should you get out, run for the hills? Well, I'm here to tell you, to give you the opportunity to have a look at this stock is worth investing for you. So I'll do a stock analysis. I'll look at the revenue, I'll look at net profit, earnings per share, PE ratio, dividends, total assets versus total liabilities, free cash flow, return on invested capital, and so much more. And right at the end of the video, yes folks, stay right to the end if you're interested. This is where you get the real value for money. What is the intrinsic value of G8 Education? Well, first of all, what is G8 Education for the uneducated out there that don't understand what this company is? It's a childcare centre. It has 430 plus, I think that's gone up from there, but they have close to 500 childcare centres around Australia. They're under around 21 brands, which includes Bambino's, Kinder Haven, Jelly Bean, and everything else. So they've got so many brands out there. So, but basically, childcare centres all around Australia to try and look after your kids as you go to work. So, if you're an employee of this company, should they give you a bit of a employee bonus if you want to go into it? Get some bonuses through the stock. Maybe that's a possibility. Do you really get much out of it? Well, there could be a sweet dividend at least out of it. And we'll talk about that right now as we do the stock analysis for G8 Education. Welcome guys and gals to the channel. Let's have a look at G8 Education. Revenue, 901 million, up from 845 million last year, so very, very good. Expected to get to 950 million in 2023, so they are doing something well. The revenue continues to go up and up and up, but the catch-22 net profit went down south. Yes, 36 million from 45 million in 2021. And interesting to see how these figures go, to see if they start pushing back up again or keep the downward trend. That's going to be the option for them. If we look at earnings per share, it's at 0.05, so pretty small, but then they're not a super big company, so that's where you're at. PE ratio of around 21. Market cap 862 million. If we look at the 52-week range, we're looking at 90 cents to $1.29. So at the moment, you're getting close to mid-range, just depending on where the price point is at the moment. But one disappointing thing is the return on invested capital is very low at 3.6%. So they've got a lot of work to do on that. And that's one metric they really got to work on if you want to get me excited about joining the G8 company. Dividend is 3.29% with a 0.04 cents dividend per year. It's pretty much 1 cent per quarter. Total assets versus total liabilities. I was a bit shocked here. Total assets are 1.7 billion. Total liabilities are 900 million. So very, very nice, and that gets me excited. And free cash flow 77 million to full debt of 133 million, so they can pay the total debt in 2 years. Boom, that's pretty good. And shares outstanding 809 million. So what is the bull case for this company? What is going well for this company? Well, can they continue to grow? That's the big thing for the bull case. They're going to grow and get more child centers. Can they double their child centers from here? Can they get double the growth and fly up? Keep going. Do they go over to New Zealand and invest there? Do they go over the other way? Do they go to America? Do they go? There's so many places they can look at. Do they want to go that far? Do they want to get that big? Do they want to go to Dubai, Singapore? Where do they want to go? This is where the next step in the evolution for G8 for me is, can they go to that next level and go, boom, let's expand. If they want to go, if they want to be an absolute gem of a stock, that's what they need to do. And if they did that, get excited. But if they're not, then you're not going to get much great rewards going forward, in my opinion. And that's where the bear case comes in. They stop growing, they just stick with what the centers they got, and they just start the thing. So revenue continues to go well, which is good. That gets me excited. But the net profit's a bit of an issue at the moment. Dividend, can I continue to afford the dividend? It's going to be the question going forward. Free cash flow, can I get that up a little bit and pay off the rest of the debt? That would be what I'd be doing. But it's not major. This is not major stuff, so they're doing pretty good for a smaller company. But this is what you're here for. We're going to look at the intrinsic value of G8 education right here, right now. What are the figures? What gives you the opportunity to maybe look at investing in the stock? Well, I use the Graham's calculator on TradeBrains. I have no affiliation at all. It's just what I use to just give me a simple calculation, and then we go from there. So we got the share price versus earnings per share, growth rate, with a current bond yield, put it all together, give it intrinsic value. So we're going to say the stock is $1.05 roughly at the moment. Earnings per share is 0.05 and a growth rate of 5%. Then you're looking at $1 stock, so you're pretty much in fair value. If we go up to 7% growth, then you're looking at 1.2, so you might be a little bit of value there. If we jump up to 0.08 and 10% growth, then we're looking at double up from there to 2.4. And if we can get the earnings per share up to 0.1, then you're at $3, and up from there it skyrockets from there. So how do we get it to skyrocket? It's all about growth, baby. If the stock wants to do it, it's got to grow, grow, grow. They may take a little bit of short-term pain for long-term gain. That's what they need to do if they want to really explode, be the next big company. This is what they got to do to work from there, work their way up. That's what they need to do. If you want me to help, get on it, because I'll help you, because G8 could be a great company for you. In terms of stock price right now, I think it's pretty much at fair value right now, $1. So where would I want to invest right now? 50 cents. Will it get there? Highly unlikely, but if we go into a big crash, you never know. If you can get it for 50 cents, load the boat and off you go. So some people say, what the hell am I talking about? Why am I even talking about it if I think I want to buy it at 50 cents? To me, I just want that sweet margin of safety. If it got down that low, then I would really seriously look at the stock, because I like to double up. But if I see a trend on going overseas, then I might start putting in some money as a little bit of a riskier play, thinking yes, the stock could fly to the moon, and get in that way. But until I hear that they're going to expand more into different countries, I'm just going to sit on the fence. But it doesn't mean you can't invest, and maybe the dividend is all you need. And if you're a worker at this company, maybe that's what you want to do. Just get a nice dividend going for you and your family. But that is G8 education, stock analysis, intrinsic value. I hope you got enough out of this video. Just you can do more research to look at this company if there's something you'd like to invest into. But have a great day out there, and I'll be back with more videos. I do it 3 days a week, every week, just for you on this channel. Remember to like and subscribe, and have an awesome day out there.